Welcome to the Investing Show, where we discuss ideas to help you make more of your money. I'm Simon Lambert of This Is Money. Joining me today in the studio, I've got Carl Harald Janson, manager of the International Biotechnology Trust. Welcome to the show. And Richard Hunter of Interactive Investor.
Hi, Simon.
Carl, biotechnology, a very interesting area, but I guess one that most of us know very little about. I mean, I must admit, when I looked down the top 10 holdings of your trust, it wasn't the normal scenario where I can see, oh, I recognise that company, I recognise that company. What is it that makes biotechnology different to the traditional healthcare sector?
Oh, there are various ways to look at this, but let's start with the perspective of an investor. So thinking about the equities in the world, you have all the equities, right? And within all the equities, there is a sector called healthcare. It's about 10+% of all world equities. And within the healthcare sector, there is a subsector called biotechnology. So it fits in within the healthcare sector, and it's the faster growing area of healthcare. And it's faster growing because it has more innovation, more growth, more new products, and that is what makes it more interesting.
And what sort of thing are these companies doing?
Most of them develop new drugs for the future, drugs that will treat diseases that are serious, that we really need new treatments for, like cancers, like Alzheimer's, like many other very serious diseases that we have no cure for today. So there's a big advancement in innovation. It's maybe not so easy to capture for the man on the street, what's biotechnology. It's much more easy to capture, let's say, the advancements that we've done in an iPhone. It used to be like a telephone, and every time I call my kids, they say, why do you call me? Why don't you text me? It's not a phone anymore to them. It's a GPS, it's a camera, it's an email system. And it's a similar thing in biotech, that traditional drugs were pills that we were taking. In the future, there are new therapies coming that are just as innovative as a GPS in a telephone. Gene therapy, for example, where instead of substituting products that we can produce, like in hemophilia, we could treat patients with a gene that will produce that. Or cell therapy, that last year we had the two first cell therapies approved in the world for cancer patients. So you would take the normal immune system from the patient that is sick, you would overnight it to the lab on the West Coast for Kite in California. They will do things for 2 weeks in the lab there to bodybuild the cells, put in your genes, and then we'll ship it back overnight to the patient, maybe in another state or across an ocean, and you will infuse it back to the patient, and those cells will then find the tumor and kill it. So it's kind of that level of innovation, and that is driving the future growth.
So instead of it being what we sort of traditionally think of as medicine and drugs, of a sort of one-size-fits-all approach, this is wrong with you, and this is what I'm going to give you for it.
Yes.
It's more care and drugs and medicine or treatments that's tailored to you personally, perhaps, in order presumably to make it work better. Exactly.
You're right to the point. So we have also new tools to personalize it, where new diagnostic measurements of the tumor or the patient, to make the right choice for the right drug. It's going to be very important. We have examples of that could be, Pfizer, that a few years ago had a new drug for lung cancer. Traditionally, you would develop a drug for lung cancer. Now, with a special test, there were 5% of the lung cancer patients that had a special mutation called ALK. Okay, so this drug only worked with ALK, so it only worked with 5% of the patients. So you test the patients. If they have these lung cancer patients are lucky enough, or unlucky, of course, to have cancer, but we're lucky enough to have of this type, then that drug would match them, and you would only give it to those patients, and everyone else could avoid having a drug that wouldn't work.
And is it fair to say that certainly when we talk about personalised medicine and DNA, for example, going down to that level of complexity, that what's happening at the moment is being helped by processing power and the ability of computers now to run so much more data?
Yeah, absolutely. We are in a shift there where this increase in computing power is going to give us another level of analysis. So far it's been like you test one thing only. You take a blood sample, you test one thing. If you would test a billion things, then you need some computing power. I don't think we're there yet. I still think, both on the lab side, on the science side, we need to find out more, and the computers need to be even better. But maybe in our lifetime, or maybe sooner, even in 5 or 10 years, we could see that.
And is it fair to say that a lot of these biotech companies, well, do they replace or are they in addition to the traditional massive research and development areas that the big pharmas used to have?
Yeah, the big pharmas, they used to have their own kind of development departments, and where they would construct 10 buildings in a row, employ 1,000 people and say innovate. Okay, innovation doesn't happen that way. Innovation is a process where there's a lot of science involved, a lot of universities involved. So the big pharmas has shifted their business model to do less at themselves and buy more things. Either buy small companies or buy mid-sized companies, or in-license even earlier from the universities. But most of the time, the large companies will like to in-license or buy de-risked assets, as they say. That would be like the ready drug, So innovation happens at universities, and the leap in the knowledge happens there, and then it's kind of moves through venture investments up the ladder to being maybe a public company, and so on. And we like to invest in everything really, except the largest companies that don't grow that much anymore, but rather in the lower level of those, and the mid and small caps. That's about 90% public investments in the trust, and then we have 10% unquoted investment in the venture fund that we do through SV Health Investors.
Now there's many criticisms levelled at active fund management, and questions as to whether it adds value. Sometimes I think that's justified, but I think definitely somewhere where you could argue it adds value is something like biotechnology, where as an individual investor you really wouldn't have the faintest idea what you were looking at. But your background is also a medical background, isn't it? So you were a medical doctor and then you moved into the world of investing.
Correct.
Can you tell us how that happened?
Oh, it happened. So I'm a medical doctor. I went to medical school, and then I worked for a few years as a medical doctor, and I was training towards becoming a hematologist when I wandered into science and did my PhD in immunotherapy in the 80s. So we developed new antibodies for leukemias, and I thought I'd move into clinics again, but the pharma industry caught eye upon that project, and it was moved into the pharma industry. So they asked me kind of to join the project, and that was kind of the divide in life. I went to the industry, and I spent 5 years with Astra developing that project before I then moved into the finance industry about 20 years ago. Briefly a sell-side analyst for 3 years, but since the year 2000 I've been on the buy side, and I enjoy it very much. It's I get to see everything that's going to be the future drugs, and I'm still part of the medical community, I feel, but I don't practice since many years. But
it gives you the ability to at least sort of evaluate it from the medical side.
When there is a news event, I could say, I could judge it, if it is, important or not important, if it should affect share price or not, and that is quite helpful.
And when you go looking for companies on the financial side, do you go looking for the company first in terms of ideas? Do you see someone who's got an eye-catching idea? You think that could be promising, that could work? Do you look at them perhaps at the financials first? Do you screen for the companies? What's your process for looking?
Yeah, it's very simple, really. There is a set universe. There is a finite number of companies that are public in this space, and it's kind of my job to know what they're doing. So the screening process is more like, I need to know what's going on in every company, and then make a judgment call if these companies are not interested for various reasons, bad management or underfinanced, or it could be a whole. So you have to take away what's not so good first, and then there is an inflow of new ideas through IPOs. Of course, you look at each IPO, and then maybe an even more important bucket or interesting bucket is reverse mergers, where a private company would go to the market the back door. So there is no one kind of from the investment bank side marketing it, and prices are usually better in the reverse merger sector. So we try to screen out what's going on there. It's not that easy because these things just happen. So that's kind of the universe. So most of the universe is in the US. We have between 80-90% invested in the US and 20% in Europe. It's not that we particularly like the US, But a lot of the industry is located there. The companies are listed on NASDAQ, and also even some European companies are listed on NASDAQ. So it ends up being very much US tilted investment, 80 US, maybe 20 Europe max, and then in Asia it's basically almost nothing really, because it's not investable right now. I would say there are not so many investment opportunities, and in some countries there's kind of like in Japan, there's conglomerate, there's a beer factory and a pharma company and the car industry, and in China it's really just getting started, so it's a bit too early. There are not that many investment opportunities. We have one Chinese company listed on NASDAQ that we have invested in.
So in terms of biotech and the sort of companies that you like, are they more bio or are they more tech?
Well, I think the biotech name is kind of misleading in a way. We kind of inherited it from the past when it was very much bio. The starting point was that there was a new type of drugs in the 80s made by cells. It wasn't kind of the chemist in the lab that was doing things. You put things into a cell and it produced the stuff, proteins. So that's why it's called biotech. Nowadays, it's more like you would think about the pharma industry as a whole, and then you have the value side, that would be Glaxo and Astra and Roche and so on, the big ones, and then you have the growth aspect of that industry, and biotech is really the growth aspect of the pharma industry, in a way. I mean, to make it simple from an investor point of view, I think.
So in terms of some of the developments we're seeing in the States and concerns over price gouging and drugs going off patent, etc., 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 that's something for a lot of the companies you're investing in to worry about much further down the line?
No, actually, so biotech is also historically been a very early stage company that only consume cash, but the biotech sector as a whole, what we call the biotech universe, went cash flow positive in 2007, and it's massively a cash flow generating right now. So it's really changed a lot. Many companies have products, they sell their own products, and they make a profit. But for some historical reasons, they don't pay very much dividend. They will buy back shares, but there is no dividend. So we have an income investor have not been able to access this industry historically because of it's only been growth. Now we introduced a dividend in our trust 1.5 years ago, so we pay 4% dividends, so we'll have both growth and the yield, and I think that's kind of fair.
Sorry, Tom, it's part of that yield gap down to the fact that in the US, where 80% of your companies tend to pay much lower dividends or yield much less than in the UK, for example.
Yeah, they actually, most of them, they don't pay a dividend at all. They will buy back shares mostly, or reinvest their money in new acquisitions or new technologies. But they are cash flow generating, and in case of being that, they usually are buying back shares. Eventually, those smaller companies end up in the larger companies. So the M&A area is very important here. M&A transaction is kind of a hallmark of the sector, where the large caps like Astra, like Glaxo, they would acquire mid and small size companies in order to fuel and increase their sales in the future, since they have reduced their own development capacities. So there are about 300 plus M&A transactions worldwide in this sector every year, with a premium paid on the day before on the stock market between 30 and 60%. So M&A is something that is an important value generator for the sector as a whole also. And we have a very diversified portfolio from venture, small, mid, and even large caps. But part of the portfolio, maybe 30% is right in the de-risked asset area where a pharma would like to buy. So a wholly owned asset that is approved or kind of had good data, so it could be approved. And it's wholly owned, good management, and everything. That is a very prime target for acquisitions.
When we think of biotechnology, we were talking before about how we have this stereotypical view of it. Yeah. You were saying actually it's cash flow positive, because I think we think of it as these are small companies burning through lots of cash.
It's also small companies. Yeah. It's kind of the spectrum of.
The other thing we think of it is expensive. When I think biotechnology, I think, small companies burning through lots of cash that are very highly rated. And a similar problem to the technology sector at the moment, where you've got companies that are very, very highly rated on a price to earnings ratio. Is it the case that these companies are expensive and they're highly rated? Or again, does it go across a spectrum, as you were saying?
I think from the point of view you made, or the comment you made earlier, it's difficult to invest in, because many of these companies don't have a P/E number yet. I mean, this sector is valued the same way as everything else. It's going to be, sales growth and earnings growth and so on. But the earlier stage companies, they wouldn't have a P multiple that we would understand. You more have to know this drug that is approved now has an MPV, over the next 10, 15 years before the patent expires, that can be calculated through a DCF or as a peak sales, and you have a price sales multiple on that, and the discounted cash flow. So you kind of have to understand, what would be the MPV of this product, and so that is kind of the value. It's like a mine, you look for gold somewhere in the mountains, you find the gold ore, and then you have to invest a lot of money to dig it up, but it's a finite amount of gold that you can get out of this mine, and there's a finite amount of money you can get back from a drug that has been approved before. At the end of the day, the patent, the exclusivity will end, and then there will be generic competitors, and prices will go way down, and it will be, low prices forever for that particular drug.
And just finally, before we finish, I was going to ask you one more question, which was, how important is demographics to investing in biotechnology? Is that going to be the big driver over the next 20 years, this aging Western population?
Yeah, that's we talked about one driver, the innovation, and that is going to give, on the output side, so to say, a lot of future growth. But also on the demand side, there are sick patients, and they're going to increase very much in the future because of the demographic change. So the percentage of people above 65 will double in the next 20 years. So from 7% to 14% in the world. So, and since you're healthy when you're young, mostly, and more sick when you're old, you get your hypertension, diabetes, and so on. The consumer is really, the elderly. And with the doubling of the elderly, of course, there's going to be an increase in the demand, definitely.
So we've got time for. Thank you very much for joining us.
Thank you.
Thank you very much.
Pleasure.
And thank you very much for watching. Join us next time on The Investing Show. Goodbye.